Good evening, dear students. Those of you who are seeing it live, and then those who will be watching it on YouTube later on. Good morning, good afternoon, good evening, depending upon whenever you will be watching it. I'm CA Manish Dafaria here. Uh, First time in this session, I'm probably interacting with you for the May 2021 attempt of our CA examination. The topic which has been assigned to me is direct tax laws, deductions from gross total income. Assessment year 21-22 is relevant for our discussion. We shall be spending 2 full sessions for understanding various issues related with this particular topic, deductions from gross total income. Okay. Before we start this discussion, first of all, we would like to keep it as interactive as possible. Those who are seeing it live would be requested to use that query box as many times as possible. Please keep this whole discussion lively. Please keep this whole discussion interactive. Using this power of technology, we cannot right now discuss on a face-to-face basis, but we can definitely interact through this query box available to us. Okay. Now, the topic which we will be discussing, this deductions from gross total income, it's a very interesting topic. I feel that way. The whole of the income tax is a very interesting subject. Number of you may not be agreeable with me, but still, I feel if read in a proper manner, if I get that particular approach, how to study, how to read tax law, then probably this is one of a very interesting subject in our syllabus. But specifically, this deductions from gross total income. Now, this is something quite interesting. Why it is very interesting? Because amongst all the topics of income tax, this is probably the most practicably usable topic, deductions from gross total income. Believe me, there would not be any assessee, any single assessee in whole of the country who is not availing, for whom this chapter is not relevant. All other topics, if you are having salary income, then probably business provisions are not relevant for you. If you are having capital gains income, then salary probably may not be relevant. But this deductions is a topic which is applicable, which is being used by each and every assessee. So leave apart from the examination perspective, but from a practical point of view, this is something very important. Each one of you, when you will be joining, you will be starting your career. If you come into practice of chartered accountant, then you will be using all these provisions for the purpose of your clients. Even if you don't come into practice, you join a job, then at least for your own income calculation, you will be requiring a good understanding of all these deductions provisions. Yeah, other provisions may or may not be that much relevant once you are into your career, but these deductions from gross total income, this is going to be relevant for each one of you. Okay, so let's try to understand in a very in a proper manner all the nitty-gritties of this particular topic, deductions from gross total income. And what I have done, I have prepared a very interesting PPT for this whole discussion, trying to highlight the subtle issues, trying to highlight the important points of this particular topic without bothering you all into, say, unnecessary details, but trying to focus on what we exactly need to know about each and every section of this particular topic. This is what we will be discussing. This is how we will be having a discussion on this particular topic, deductions from gross total income. I hope you will find this PPT very useful. Okay, so just keep your eyes focused on your screen, keep your ears focused on whatever I am saying, and let's try to understand various issues related with this particular topic, deductions from gross total income. Okay, and one more thing before we start our discussion, this is a final level class. So all of us have already studied this topic. This is not something a new topic for us. In indirect tax laws, there are certain topics particularly related with international taxation and all, which we study first time in the finals. But this deduction is a topic which we all have studied in our IPCC intermediate level. Okay, some of us have studied it once. Some of us might have studied it more than once also. That is also possible. But still, at the final level, we need to generate some further clarities, some further understanding, some very finer issues related with this particular topic is what we need to develop an understanding at the final level. Okay, so deductions from gross total income. Fine. Now, this is chapter 6 of the Income Tax Act, which provides about these various kind of deductions. Okay, deductions from gross total income, deductions from GTI, chapter 6. Starting from section 80C till section 80U, various sections are there. Okay. Now, after all these deductions, whatever income I get, whatever figure I get, that is called total income. So there is a gross total income and then there is a total income. At final level, we need to be very, very clear with all these finer understanding, with all these terminologies. Gross total income and total income, there is a very big difference. GTI, gross total income, that is before chapter 6 deduction. Total income after chapter 6 deduction. Okay, number of other sections of the act, there is a reference somewhere to GTI, gross total income, somewhere to total income. So I need to be very, very clear which section is talking about GTI and which section is talking about TI, total income. Just to give you an example, in case of clubbing provisions, the income of minor child, that is to be clubbed in the hands of mother or father. Now you all will immediately say, sir, there is a provision, whomsoever is having higher income. Now you need to have a clarity, mother or father, whose income is higher, which income? Gross total income or total income? And unless and until you develop this kind of clarity, income tax is going to create a problem. But moment you start seeing the tax law in this particular manner, focusing on the important points, then things become easier. So the point we are, and this is what we are going to do in this whole discussion. I will not only give you the concepts, I will not only try to give you the clarity on the provisions, but probably I will try to give you an approach how to study, how to read the tax law. Where should be your focus when you are studying income tax? Then where should be your focus? What are the points which we normally miss? And these are the points where examiner creates an hit and we start facing problem. Okay. Fine. I'm already getting some queries. Sumit Agrawal, please explain section 80A subsection 6. Yeah, Sumit, hold on. Hole. We will be discussing everything. Okay. Then there's this Ramaya R. COVID related expenses mainly, if any contribution given by a company deductible. Okay, Ramaya, we will answer to that particular query also. Let's just develop that basic idea how we are going to study, and then we will take all these sections in a one by one manner. So the point I was trying to make, what I will be doing in these sessions which have been allotted to me, is try to give you a approach how to read the tax laws. Where should be your focus? What is the point which a student normally miss, but which should not be missed? Where the focus should be there. So that idea, that final understanding also we will try to generate. So this is the first point. There is a difference between gross total income and total income. Normally speaking, okay, in income tax, in fact, there is no word called income. If anybody talks to you about income, as a tax professional, you need to ask this question, whether you are talking about gross total income or you are talking about total income. if he says my income is this much, now whether this is GTI or whether it is TI, what is the difference between gross total income and total income? In our times, we have been told sometimes the difference between gross total income and total income is 6 months. If you don't understand the concept properly, 6 months, May to November or November to May. Okay, jokes apart, the difference between gross total income and total income, that is chapter 6, okay, deductions. Income before deductions, GTI, income after these deductions, total income. So these are the deductions which we are going to discuss today, which will take us from gross total income to total income. Okay. Now, in order to develop a comprehensive approach, in order to develop a comprehensive clarity about this particular topic, let's develop a what is called macro level idea first. Okay, overall chapter. Then we will develop micro level clarities related with each and every section, but first a macro level clarity. Okay, this whole complete chapter, number of deductions are available. Now, for the sake of generating clarity, we can segregate all these deductions into 3 different categories. Okay, 3 categories. First is deductions which are based on certain payments, section 80C to section 80GGC. This is our first category of the deductions available. All our deductions, every amount under these sections is required to be reduced from the gross total income, that the treatment is common. But then there is an inherent difference. It is a basic difference, and that will help us to understand that particular difference. So there is this first set of deductions which are based on payments. What an assessee is required to do to avail these deductions is to make certain specific type of payments. Only if he has made certain payments, then only he will be entitled, he or she will be entitled for these deductions, section 80C to 80GGC. Because you are at the final level, so I can straight away generate certain examples. Say for example, we all know this life insurance premium, deductible under section 80C. You must have studied it for your final inter IPCC. You must have done the calculations in during your articleship. So we all know life insurance premium is a item deductible under section 80C. This is a payment based deduction. Okay, so anybody who has paid that life insurance premium, he or she only can claim this particular deduction. So this is this first set of deduction. Different sections list out different kind of payments, and then the deduction can be claimed based on those payments. Okay. Second set of deduction, that is deductions which are based on certain income, section 80IA to section 80RRB. Deductions which are based on certain income. Now, for availing these deductions, the second set of deduction, I'm not required to make any payment. What I need to have is that specific type of income included in my gross total income, and then I will be entitled for these deductions which are based on certain income. Say for example, we will be discussing it in detail. There is this section 80TTA, interest on savings bank account, deduction available up to rupees 10,000. Now for this 80TTA deduction, what is required? That my income, my gross total income, which I have already calculated, that should include this kind of income, that should include interest on savings bank account. If my income includes that particular item, then automatically I become entitled for that 80TTA deduction. So very important difference, and this is what the final is all about, understanding these basic concepts, generating that basic clarity. A very important difference between these payment based deduction and income based deduction, that for payment based deduction you need to do something extra. You need to make that particular payment. From an examination perspective, in exam paper there has to be some extra information related with this payment based deduction. Question must contain one sentence, assessee has paid donation to falana, to this kind of organization, assessee has paid health insurance premium, assessee has to do something extra, some extra information will be there in the question for payment based deduction. But for income based deduction, there will not be any separate information available in the question. Practically, assessee is not required to do anything extra for availing these income-based deduction. If I'm having an income in the nature of savings bank interest, then I automatically become entitled for that ATTT deduction. So in examination question, now they will give you information with respect to income, that okay, interest from savings bank account rupees 7,000. Now you all will be including the 7,000 in income from other sources of the assessee. But at the same time, it should get clicked in your mind that, okay, this is savings bank interest. So when I will be calculating those deductions, then I need to keep in mind that, yes, there is this ATTT deduction is required to be given. So deductions based on payment, something extra has to be done by the assessee. In your exam paper, some extra information would be available, which will give you an idea that, okay, this deduction is to be claimed. But with respect to deductions based on income, there will not be any separate information available in the examination. If assessee is having that particular type of income, the deduction has to be given by you while calculating taxable income. Okay. So first set of deduction based on payment, ATC to ATGGC. Second set of deductions based on certain income, ATI A to ATRRB. And then third one single section, which is a deduction based on the assessee itself. Assessee is a person with disability, then that deduction under section 80U is available to that particular assessee. Okay. So this is our first basic idea. Deductions from gross total income, the macro level view, the broad category. So whenever we are understanding one particular section, now I need to have this clarity whether it's a payment based deduction or it's an income based deduction, or it is a say section 80 separate deduction. If it's an income based deduction, then no extra information would be available in the question. Payment based deduction, there will be that extra information related with the payment made by the assessee. Okay. So with this macro level idea in mind, now let's start generating micro level clarities. Let's start now let's take each type of deduction one by one and then go into the relevant sections in a minute detail. Okay. So payment based deductions. Now again, before we start our section by section discussion, which I'm sure majority of you would be already having some kind of idea, what I would be required to do is to simply refine, is to simply polish whatever knowledge you are already having. But before that, before going into that section by section discussion, let's again try to generate an idea about the method of study. How these sections are required to be read, all these payment based deductions provisions. What as a student I need to see, what as a professional when I read the law, I see where is my focus, what should be where should be your focus as a student. We all have faced this kind of problem, including myself also. When I was giving my exam, number of cases this happens, that whatever I have a clarity, examiner doesn't ask that thing. This is clear to me, but this has not been asked in examination. Examination creates question on a different aspect where I probably do not have a clarity, because examiner knows that this is the part which everybody must have studied properly, but this is the area where focus doesn't focus is not there when as a student I study that part. So I needed to have that clarity, how to study the section, how to study the law, how to study the income tax, so that I can put my focus at the proper place. So payment based deductions, what should be my method of study? In every section, what I should be looking for? There are three aspects. each of these sections, I would be required to generate a clarity about these three aspects. What are these three aspects? First is I needed to have a clarity who is eligible to claim a deduction under this section. Okay, that is the type of assessee. Which assessee is entitled for this deduction? We all know in income tax, there are number of assessees, individual, HUF, partnership, company. Every deduction is not available to every assessee. Say, for example, if you should ask this question to yourself about this whole section 80C. Each one of you must have studied it at IPCC intermediate level. Most of you must have used this section during your articleship and everything. Do you have an exact clarity who all assessees are entitled for this deduction under section 80C? Type of assessee, who are the assessees? Okay, or let's start our interaction at this point of time. Okay, this is my first question to you, and you can send your answers in the chat box. We have not studied that section, but let's test your knowledge already. Section 80C, whether this deduction is available only to a resident assessee or it is available to resident and non-resident both. Send me your answers. Type of assessee. Do we have that finer understanding? Deduction under section 80C. Whether it is available to resident and non-resident both or only to the resident. If examiner, and they ask this kind of question, examiner asks this question, they will deliberately give you that particular line in question. Mr. X, individual, non-resident in India, have made a payment of life insurance premium, whether 80C deduction is available or not. And in examination, that non-resident word will start troubling me. Even if I'm very clear now in examination, that will create a problem. Why the non-resident has been written, whether 80C is available for non-resident or not. Okay, so any answers? Whether 80C is available for non-resident or not? Okay, so Gonthi from Chennai, only resident individual. Raman, both the assessees. Okay, I have got two answers. One is from Delhi, second is from Chennai. Anybody? Somebody there from central part of the country? North and south we have covered. Central or western or eastern part of the country. 80C is available for both types of assessees or it is only for resident? Okay, we will see to that particular answer. But this is what is the idea. This is what is the basic clarity we need to develop. In this class, there is no point me telling you 80C deduction is available maximum up to 1,50,000. You all know it, already you know it. What we would like to use this time is to develop these kind of clarities more. Who is eligible to claim that particular deduction? Okay, what is the type of assessee? Okay, Ramaiya from, okay, we have got Sumit from Jaipur. This is Central India, only residents. Good. Ramaiya from Tiruvananthapuram, individual. Yeah, Ramaiya, individual is okay, but which individual? Which individual? Resident, non-resident? Sumit, only resident. This is final. This is final is all about. All these basic final clarities. 80C 1,50,000 deduction, you all know by heart. And even if somebody asks you in the midnight 3 o'clock, you will be answering 1,50,000 limit. That is for sure. But examiner won't test you on this. He will test resident and non-resident. And as already we are saying, there is a good amount of confusion. And we will see to that particular answer. Okay, Ambika from Mumbai, both the assessees. Good. Okay, we will see. But I hope I'm able to generate that say clarity in your mind. What you need to study, what should be the approach for the study. Okay, so payment-based deductions. First, I need to understand who is eligible for these deduction. What is the type of assessee? Second, I need to develop a clarity. What is eligible? What all are the types of payments which are covered? We might be having a say broader clarity about these types of payments, life insurance premium and PPF and everything is covered in ATC. But then we need to have a further clarity, okay, a further detailed understanding. Life insurance premium on the life of whom? Whose life? My life, spouse life, children, major children, minor children, married, unmarried, son, daughter, parents, relatives, whose life? Okay, so what is eligible? Type of payment. Which type of payment is covered for this particular deduction? Okay, that is the second clarity we need to generate. Okay, and then the third aspect of each section, how much is eligible? Okay, amount of deduction. And this is something we all are already clear about. Now, whenever numbers are there as a chartered accountant, I feel absolutely comfortable. Okay, amount of deduction. So sir, I know every section by heart. This much deduction is available in this particular section. Fine enough, good. You need to know this thing, amount of deduction. But before this, type of assessee, type of payment, and type of payment not in the broader terms, but in all possible minute details. But all are the payments which are eligible for this particular deduction. Okay. So friends, this is what is the method of study. This is how the section is required to be read. This is how the deduction chapter is required to be read. This is how this payment-based deduction topic portion is required to be read. Who is the assessee for whom the section deduction is available? Who is eligible? What is eligible? How much is eligible? WWH. Who, what, how. How is last. First is who, second is what, and then how much. Okay. So all our further discussion, every section which we will be discussing now, that discussion shall be based on this particular pattern, okay, this particular method of study. Who is the assessee? What is the payment eligible? And then the quantum, then the amount of deduction. Okay. Fine. So after generating all these basic clarities, now let's start our discussion on a section by section basis. Let's take every section and try to do minute analysis. I'm very sure whatever we are going to discuss, 50% you must be knowing already. Okay. But because you already know 50%, don't lose your focus. Don't lose your attention, because I already told you the 50% which you know, examiner is not going to ask. They are going to ask only that 50% which probably you are not having a clarity about. Okay. So amongst all these discussion, you need to be that much cautious, that much alert to pick that particular part, which is something new, which is not already known to you. Number of things we will be discussing. I'm again repeating it. You are knowing it already. But then during that course of discussion itself, something will come up that must be important, and that must get your focus, that must get your attention. So try to focus on that particular part. Okay, let's start our journey. Let's start our discussion. Section 80C. Okay. I must say the most usable section in the country. Okay, out of say all the individual assessees who are filing their return, 99.99% cases the deduction under this section is being claimed. And I'm sure you all would agree with me. Whatever kind of returns you have filed during your articleship, all individual returns at least, there must be one thing or other related with this section 80C. So probably the most usable section of whole of the income tax. Okay. Now, what is the final understanding we need to generate? Eligible assessors. Okay, who is eligible? First, W, type of assessee. Section says an individual, HUF. Okay, so first of all, it is not only the individual, but also HUF are also covered. I have got some answers on the screen talking only individual. So for all of them, the clarity should be it is individual and HUF, eligible assessee. Individual can claim the deduction, even an HUF can also claim the deduction. Okay, eligible assessee, eligible payments. But before this, sir, that question has remained unanswered. Resident or non-resident? Type of assessee, individual HUF, that is okay. But what about the resident and non-resident? Okay. Now, this is another interesting aspect of income tax. How to read the act, how to read the law. Income tax is a very interesting subject in the sense that here, what is written, that is to be seen. Sometimes what is not written, that has to be seen more carefully. What is written, that is to be seen. What is not written, that is to be seen more carefully. So how we can see what is not written? But this is the art. This is what is the expertise I need to develop. If something is not written, probably that is more important in number of cases. Okay, how come? Say for example here, what the section is saying that ATC deduction is available to every individual and a Hindu undivided family and HUF. Stop. After this section is silent. Section is not talking about resident and non-resident. What does it mean? What does it mean? It simply means that it is available for both resident and non-resident. They have not said that in the case of an individual resident in India, following deduction is available. If they would have said so, in the case of an individual resident in India, then the deduction would have got restricted only to individual. But the word resident is not there in section 80C. If you have got a textbook available with you or the BAR Act available with you, or I'm sure you are watching, so you can access even Google also, go to the copy of Act and then see that particular section. There is no mention about the residential status, something not written. How to interpret it, and that is the real expertise in income tax. If I can interpret what is not, if I can see what is not written. So they have not written anything about a residential status. That means this deduction is available to both the residential status assessees, resident as well as non-resident. If they would have required to restrict it to resident, they would have written in the case of an individual and HUF, comma, being a resident in India. This is not there. Okay, so deduction is available to individual and HUF. Section is not talking about a residential status. That means both the assessees, resident and non-resident, both are covered here. Okay, I hope you all have got a clarity now. I have given you the answer, and then more importantly, I have given you the approach how to find out that answer. Okay, so eligible assessees, every individual and every HUF, whether resident in India or non-resident in India, they can claim deduction under section 80C. Fine. Now, coming to eligible payments. What is eligible? Who is eligible? And then what is eligible? Eligible payments. Now there is a long list. You might be knowing, say, already most of them. What all types of payments are eligible for this particular deduction under section 80C of income tax. We will be again going through that particular list, at least all those payments which are relevant as of now also. Some of the payments mentioned in the section might have been mentioned in your textbooks, but those kind of payments are no more practically relevant. So we will be focusing only on those payments which are relevant even today, practically also, which kind of payments you can make. So all those payments, and then again each and every payment trying to generate certain finer clarities, okay, certain finer understanding what all are the eligible payments. Okay. So the very first, most important, most commonly known is life insurance premium on the life of specified persons. Okay, life insurance premium paid by an assessee, deduction is available under section 80C. This is what is the first level of understanding. But at the final level, I need to go beyond this first level. Okay, those of you who are seeing it carefully, they already must be seeing something specific written there, life insurance premium on the life of specified persons. So question must have been popped up in your mind. So who are the specified persons? Hold on to that question, we will be answering to it, okay? But this is there, life insurance premium on the life of certain persons, certain specified persons that will be eligible. Who are these persons? We will be discussing just a minute. But before this, with respect to life insurance premium, how much is the deduction available? What is the quantum of deduction? There are certain restrictions. In case that policy has been issued up to 31st March 12, that is before 1st of April 2012, if the policy has been issued, the premium paid on that policy up to 20% of sum assured is allowed as a deduction. Any premium in excess of that 20%, that deduction is not available. So if there is a life insurance policy where the insured amount, sum assured is, say for example, 5 lakhs. The policy has been issued somewhere in 2011, sum assured is a 5 lakhs. 20% of that 5 lakhs is 1 lakh. If my SAC has paid a premium of 1.25 lakhs, the deduction eligible would be 1 lakh only. The amount which would qualify for this deduction would be only 20%, 1 lakh. Policy issued before 1st of April 2012. That is up to financial year 11-12, whatever policies have been issued, 20% of this policy amount would be the deduction available. Premium more than the 20% will not be entitled for the deduction. If the policy has been issued after this date, then 10%. The ceiling will go down further. So if the policy amount is this 5 lakhs and the premium paid is 75,000, then the deduction only up to 50,000 would be available if policy has been issued in FY 12-13 or subsequent years. Okay. So practically speaking, nowadays, if we are talking, then this is second situation is more relevant. Majority of cases today, policy would have been issued on or after 1/4/12. So 10% is the ceiling. Premium paid is more than 10% of policy amount will not qualify. And then there is one more aspect to it. If policy has been issued on or after 1/4/2013 and it is on the life of a disabled person, any person who is suffering from a disability covered under section 80U, or any person who is suffering from a disease covered under section 80DDB, both these sections we will be discussing. So any person who is suffering from certain specified diseases or who is a person with disability, policy issued on or after 1st April 2013, then the ceiling would be 15%. So for normal persons, this will be 10%. For persons with special abilities, what we call persons with disability, the cap would be 15%. Premium paid beyond this amount would not qualify for the deduction. So this is what with respect to life insurance premium, the maximum ceiling. The question still remains specified persons. Who are specified persons? We will be discussing, and that is another final clarity we need to generate. Okay. Okay. Sumit Jain from Jaipur, premium paid includes which components? Okay. Sumit, premium does not have any component as such. It is the total premium which you are paying that is entitled for deduction. If you are talking in terms of any GST paid on the premium, so practically even that GST is also part of the premium. That total amount is entitled for the deduction. Sumit? Okay. So this is the first payment covered under the section 80C life insurance premium. Then second is contribution to PPF. public provident fund account, any amount contributed, deposited in that public provident fund account, that is also entitled for deduction under section 80C. Plain and simple, no further complications. The only thing is, again, the account must be opened in the name of specified persons. So who are specified persons for this clause? That again we need to see. So life insurance premium, public provident fund contribution. Now, contribution in the name of any specified person in the ULIP schemes, unit linked insurance plan. Okay, ULIP schemes, insurance companies have come out with these kind of schemes. So ULIP schemes of these insurance companies, contribution in these ULIP schemes, that is also entitled for deduction under section 80C. But again, contribution in the name of specified persons. Okay. So I might be knowing it already, LIC and PPF and ULIP and everything, but probably where at the final level I need to generate a clarity, and even in IPCC inter level also I need to generate a further clarity that these payments can be made in the name of who are the specified persons. Okay, now let's develop that clarity. Again, try to read it very, very carefully. The approach which I have already given to you, read it with that particular approach. I'm going to create another question based on this. Specified persons, life insurance premium, PPF, ULIP. In the case of an individual assessee, this payment may be with respect to individual, himself or herself, spouse, and any child of such individual. In the case of HUF, this may be with respect to any member of the family. Okay. This is what is written in the section. Section says so, and then it becomes silent. Section chup ho jata hai iske baad. Section becomes silent. But it remains for me to develop certain further understanding. Okay. So see it again carefully. In the case of an individual assessee, say for example that life insurance policy, it may be on the life of individual, himself, herself, on the life of spouse, and on the life of any child of individual. In case assessee is HUF, then it may be on the life of any member of family. Okay, so this is what written in the act, this is what written in the books, this is what written in the institute study material. We all read it and then we move forward. Okay, we go, move ahead. We feel, okay, this is something simple. I know everything. Everything is now clear. Let's see how much clarity we have generated. Two questions for you. I will wait for your answers. Let whole of India should answer these two questions. Whether payment is to be made only for minor child, or it can be for major child also. And then whether payment may be for married daughter. This married daughter is an examination question. Huh? They have asked this question already. So send me your answers on these two questions. Life insurance premium, PPF, ULIP. Only minor child or major child also. And then whether payment may be made for married daughter. I'll be waiting for your answers. With the payment in respect of only minor child is covered, or it can be for major child also. Examiner will ask this question. The life insurance policy on the life of son. Son has just completed 18 years of age during the year. So why it has been mentioned in the question, son has completed 18 years of age, whether still the deduction would be available or not. Okay. So Sumit, minor and major if dependent, not on married daughter. Raman Sachdeva from Delhi, only minor child, not married daughter. Okay, Vasanthi from Trichy, both the minor and major children, married daughter also. Ambika, both. Ramaya from Tiruvananthapuram, minor or major, married daughter is also included. So we have a clear-cut difference of opinion. And probably answers from Jaipur and Delhi, only not on married daughter. But south is Trichy and Tiruvananthapuram. Married daughter is also covered. How to read the income tax? If you know this, income tax is most interesting subject and easiest also. Okay, Mansha from Delhi, any child, whether it is dependent or independent. Gomthi from Chennai, both are covered. Sumit Agrawal, Mathura, in this case, both minor and major would be considered. Okay. So again, rather than me giving you a direct answer, I will try to tell you how to find an answer on yourself. Okay. Rather than simply saying yes and no, let's try to see the process of reaching to that particular answer. Let's again go back to the old slide, and that's why I've said read it very, very carefully. What is written there, that is important. What is not written there, more important. In the case of an individual assessee, the specified persons are Aruna from Rohtak, minor and major both. Okay, Madurai, Muthulakshmi from Madurai, deduction available for minor and major and also married daughter. Okay, fine. Those who are getting it right, congratulations. Those who are having some doubts, again, try to get that particular approach, how to read the law. In the case of an individual assessee, individual, spouse, and any child of such individual, what they are writing, any child. Is word minor mentioned there? Any minor child of the assessee, whether it is mentioned there? Any child of the individual dependent on assessee, whether it is mentioned there? No, sir, not there. What is not there? Try to read it. Try to see the income tax in that particular manner. What is there and what is not there? They are not writing anything about majority or minority of child, at least in this section. Other sections, what they are writing, that is separate. In this section, they are using the word any child. So whether the major son is covered in the definition of any child or not, you can get your answers now on your own. You don't need me as a teacher now. A minor son is any child. A major son is any child. Okay. Aruna from Rohtak, not married daughter. Okay, not many are saying not married daughter. Okay, so this is now pinpointedly focused issue for you. The word which act is using is any child. Whether married daughter is covered in any child or not. Whether after marriage, daughter is still covered in the definition of child or she is no more covered in the definition of child. They are not using the word child dependent on assessee. If they would have talked about dependency, then you would have said, no, sir, married daughter is no more dependent on assessee, so she is not covered. But they are not talking about dependent children here. They are talking about any child of the individual. So what do I mean by any child? Major son, minor son, both are any child. Married daughter, unmarried daughter, both are any child. Okay. Yeah, Sumit, I will come to your question. But before this, let me give this clarity to all those who are, say, listening to this particular telecast, and all those who will be, say, seeing it on YouTube also. This is final. This is income tax final. You need to have this kind of final clarities for your professional practice. This is what we are teaching you. This is what we are preparing you in order to be a good professional, in order to be a good tax consultant. You need to have this clarity. You cannot answer income tax based on common sense, based on I feel like so, मुझे ऐसा लगता है. That is not the criteria. What is written in the law, that is final, and how to interpret it. So when the section is talking about any child of such individual, that means it includes minor child, it includes major child, it includes dependent, and includes independent. Even a married daughter, even after marriage, she is still child of the individual. So on her life also, if the insurance premium is being paid, ATC deduction is available. Tell me if you are getting it clearly or you are still having some issues. Okay. Yeah. Now coming to, say, another related query. I am sure you, Sumit, who is raising this query from Jaipur, you must have got your answer. Sumit, again, the question is being asked, what about parents of the assessee? Whether life insurance premium paid on the life of parents is eligible for Section 80C, whether parents are covered in that specified persons. No, what is not written, that is also required to be seen. If parents is not written, that means for the parents life insurance premium, this deduction is not available. There will be a separate section where even for parents payment also the deduction would be available, but not with respect to ATC. That life insurance premium, that PPF account, that ULIP policy taken in the name of parents, even if parents are dependent on the assessee, ATC is not applicable, because what they have written is only three categories: individual, spouse, any child. Any child includes all types of child: major, minor, married, unmarried, dependent, and dependent, but only child. Individual is spouse and child. In the case of HUF, now they may ask this question: in case of HUF, LIC has been paid on the life of a member who is not dependent on HUF, whether ATC deduction can be claimed. If you have got the approach, then you would be able to answer it very clearly. So what is written here is any member of the family. They are not talking about any member of the family dependent on the family. It is not written there. So in case of HUF, any member of the family, dependent, not the criteria. Okay. My whole purpose of emphasizing this again and again is to give you a clarity about ATC that is there. But there is a larger purpose behind this. Based on this particular example, I'm trying to inculcate a habit in each one of you, those who have cared to, say, see this telecast of the institute. Okay, for all of those, I'm trying to inculcate that habit in each one of you, how to read the income tax, how to find out your own answers. What is written there in the act? See it carefully. Try to see also what is not written there. Try to. This is difficult, but this is what is required. If it is dependent children is not written there, that has got some significance attached to it. Okay, so ATC is specified persons. Fine. Now move forward. Remaining part of that section ATC, where nothing much is to be discussed from my side. Majority of it you all are already clear. These are certain other payments which are covered under section ATC. Subscription to Sukanya Samriddhi Yojana in the name of assessee or any girl child of the assessee or any girl child for which assessee is a legal guardian. The Sukanya Samriddhi Yojana account has been got opened. The section is talking about in the name of assessee or any girl child of the assessee, but due to scheme of that Yojana itself, this account cannot be in the name of, say, any girl child beyond the age of 18 years or something. So section is not talking about any age as such. Section is talking about any girl child of the assessee or any girl child for which assessee is a legal guardian. Then subscription to this NSS scheme, subscription to NSC, National Savings Certificate. Now, with respect to this NSC, there is another interesting point, that whatever contribution you have given to NSC, whatever investment you have made in this National Savings Certificate, that investment shall generate an ATC deduction for you. Subsequently, there will be an interest accrual on these NSCs. This interest accrual shall be added to your income from other sources, and because it is getting accrued, so it will be treated as if it has been reinvested in these certificates. So next year, that interest earned will generate an ATC deduction also. The interest earned will become taxable, and then it will be entitled for this ATC deduction also. Okay. Okay, so National Savings Certificate. Then assessee's contribution to Provident Fund. Salary chapter, we all have studied. There is statutory Provident Fund, there is recognized Provident Fund, and then there is something called approved superannuation fund. So assessee's contribution to these funds, the deduction is available. Then subscription to ELSS, okay, Equity Linked Savings Scheme, units of notified mutual fund, the contribution paid, subscription given to this ELSS, that is also eligible for deduction. Okay. Two queries I am having. Mansha from Delhi, any child includes stepchild, right? Now you have started, say, picking up the thread. Any child word they have used. Any child, it includes stepchild also, definitely. It includes even adopted child also. Legal right is required to be seen. So wherever the legal right is same, then they all are included in the definition of child. Okay. Sumit is having a question, taxable under which head? I think you are talking about interest on NSC. That interest on NSC is obviously taxable as income from other sources. Like all your other interest on investments, NSC interest is also taxable as income from other sources. So first it will be added to your other sources income, shall become a part of GTI, and then a deduction under section 80C will be there with respect to that interest accrued. Okay. Another query, in a case of ELSS sold before 3 years, then what will be the treatment? Okay, ELSS, Equity Linked Savings Scheme. You are subscribing to that scheme, ATC deduction is available. Then you need to hold on to these units for minimum 3 years. If you liquidate these units before completion of 3 years, then whatever deduction you have claimed earlier, that will become cancelled, that will get added to your taxable income as your income from other sources. Okay, Sumit, again from Jaipur. Fine, eligible payments. Okay, the next eligible payment, which will again require some finer understanding, that is this tuition fees. Tuition fees eligible for deduction under section 80C. Okay. Now the first clarity, tuition fees, that means only tuition fees. Any other payment like development fees or building fees or any kind of capitation fees, donation, etc., not covered. What they are talking is plain, simple, only tuition fees. Now, tuition fees to any university, college, school, or any other educational institution situated within India. Okay. Tuition fees to any Indian educational institution, university, college, school, or any other educational institution situated within India for the purpose of full-time education. Lot many smaller things, lot many say hidden issues involved. So tuition fees only, educational institution in India for the purpose of full-time education. The fees must have been paid for the full-time education. So that's why number of times a question is asked to me whether sir fees paid to any coaching institute can be covered here, because that is not a full-time education. So that is not covered here. It has to be a full-time education. Okay. So for the purpose of full-time education of any two children of individual assessee. Now any two children of individual assessee. Okay. Now, each one of you must have read it. Even before me pointing it out, you must have read it. It is only children. Again, no mention about major, minor, dependent, not dependent. So even for the married daughter, this tuition fees has been paid. Practically, this may not be the situation, but still in a rarest case, this is possible. For the married daughter, tuition fees has been paid by his father, her father. Deduction is available. Children, she is still children. Even if she is a married daughter, but she is still qualify as a children, as child of the assessee. So for any two children of individual assessee. Okay. Whether this education needs to be a higher education kind of thing. Subsequently, we will talk about a section where interest on higher education loan would be entitled for deduction. For ATC, whether it has to be a higher education only, they are talking about any educational institution. So even a nursery class fees paid can also be claimed as a deduction. Okay. Two children of individual assessee. Okay. Whether grandfather paying the fees of grandson, deduction would be available. These all are the issues. Examiner keep on creating these kind of issues. In real life, you keep on facing these kind of issues. Questions, client keep on asking these kind of questions. So grandfather paying education fees, school fees of the grandson or granddaughter, whether deduction is available, not available. Two children of the individual assessee. Okay, so it has to be father son, mother son, father daughter, mother daughter kind of relationship. Any other relationship would not get covered here. So lot many small issues. Tuition fees, only tuition fees, any level of education, but educational institution should be in India, full-time education, any children of the assessee, but it should be children, not the grandchildren, not any other relative, any two children of the individual assessee. This tuition fees can be claimed as a deduction. Okay. Then in respect of residential house property, the next eligible payment for section 80C is with respect to residential house property, purchase or construction of a residential house property. My assessee has purchased a property or he has got a property constructed. Then the loan which he has taken with respect to that house property, the principal component of that particular loan which has been repaid, eligible for ATC deduction. Okay. Now, with respect to this housing loan, we already know that interest on that housing loan that can be claimed as a deduction as income from house property. ATC is talking about principal component. Whatever is the original principal amount has been repaid with respect to that particular loan, that principal amount is eligible for deduction under section 80C. And with respect to that residential house property which you have purchased or got constructed, stamp duty, registration fees, etc. paid by the assessee. If you are purchasing a property, you are getting it registered in your name. So whatever stamp duty amount has been paid with respect to that particular property, even that amount is also eligible for deduction under section 80C with respect to this residential house property. Okay. With respect to the tuition fees, again, there is a question with respect to ICAI fees. Yeah. See, the criteria is it has to be a full-time education. So if you feel ICAI is a full-time education, the deduction is available. If you feel, no, sir, ICAI is only a part-time education, then the deduction would not be available. Now, I'm sure if the question is put to you, whether ICAI examination study is a full-time or not, probably some of you will say, sir, it's an overtime study, not only full-time. So very clearly, it's a full-time education. It's a complete course. It's a complete study, complete degree which you are getting. So payment for this eligible for deduction. ICAI fees, ATC deduction is definitely available. But another interesting point with respect to the tuition fees. Father makes the payment for son. Father can claim the deduction. Son makes the payment for his own fees. Then deduction is not available. So tuition fees of the children must be paid by the father. Then the father or mother can claim the deduction. But I'm doing my own education. I'm doing a course from ICAI, and then I'm paying fees to the ICAI. I cannot claim the deduction. Probably I should ask my father to pay that particular fees, and then he can claim that particular deduction. Okay. So any full-time education. Okay, these are certain other payments, not much of the issues as such. You simply need to keep them in mind. Minimum 5 years time deposit with any scheduled bank or with post office. Then there are bonds issued by the NABARD, and then there is deposit. The senior citizen savings schemes deposit there. All these will generate a deduction under Section 80C to my assessee. Okay. Now, the last point related with this, and which I'm sure we all have a clarity already, there is this maximum ceiling, maximum deduction, which is available under Section 80C. All in all, in totality, the maximum deduction is available up to rupees 1,50,000. Okay. 1,50,000 maximum deduction, along with certain other sections which we will be seeing later on. The total maximum deduction is 1,50,000. I am very sure 150 ATC limit, each one of you is clear, but final is not about knowing this limit of 1,50,000. That is something very obvious, very given. Final is all about having a clarity on these minor, small kind of issues. When they are talking about any child, that means they talk about all children, major, minor, married, unmarried. When they are talking about individual as an assessee, they include a resident and non-resident both. All these final issues related with the ATC is what is the clarity we need to develop at the final level. Okay, fine. So this is our first section. Okay. We already took a good amount of time, already almost 1 hour is there discussing this whole ATC. These are various kind of deductions available with respect to ATC. Okay. Yeah. Interest received on that 5-year deposit is taxable. Yes. That 5-year fixed deposit will generate an ATC deduction, but whatever interest you will be earning, that is your normal income from other sources. So that interest earned on that FD, that will always be taxable. Okay. Now come to next section, section 80CCC. Not very popular, practically speaking. Academically, it is part of that whole chapter. So we need to have some idea about this also. Section 80CCC. What is the payment which is eligible for deduction here? That is some specific pension plans of insurance companies. For LIC, the trade name is Jeevan Suraksha, and other similar plans of other insurance companies, some specific pension plans of the insurance companies eligible for this ATC deduction. Okay. The requirement is this: the payment must have been made out of the taxable income of the assessee. Okay. This contribution to pension plan of the insurance companies paid out of taxable income of the assessee, 80CCC deduction is available. Who are eligible? Only an individual, not even HUF. ATC was for HUF also. 80CCC is only an individual. Okay, fine. How much is the deduction available? Amount paid or maximum 1,50,000, whichever is lower. The maximum deduction one can claim in 80CCC is 1,50,000. this 1,50,000 is the overall limit along with section 80C, 80CCC, and then 80CCD clause 1 also, which we will be discussing later on. So all three inclusive, maximum 1,50,000 deduction can be claimed. You can claim complete 1,50,000 under 80CCC itself, or you can have 80C, 80CCC, 80CCD1 all inclusive, maximum 1 lakh deduction can be claimed. Okay. With respect to this 80CCC, now there is another provision which is important, that when the amount has been invested, you will get a deduction. When you will receive the amount back, or the assessee's nominee will get the amount back, whatever amount has been received, that will be taxable. So this is something interesting, important related with this 80CCC pension plan. You invest today, you claim an exemption. Whenever you will be receiving money back, then that amount received shall be treated as your taxable income. Assessee may receive the money, or in case of death of assessee, his or her nominee may receive the money. Whomsoever receives it, he or she will be liable to pay. That will be treated as taxable income of the receiver whenever the amount will be received back from this pension plan 80CCC. Okay. Now the third section of the day, 80CCD. Okay. Now 80CCD has got some complications involved in it. So let's see it with a bit more alertness. 80CCD. Deduction in respect of contribution to National Pension Scheme, NPS. Contribution given to that NPS can generate this deduction to the assessee under section 80CCD. First of all, who all are eligible assessees? Only individual again. Not even HUF, only individual, 80CCD. Okay. My simple suggestion would be to all of you to try to develop a simple chart kind of thing. These smaller issues, examination, they create whole amount of confusion. Which section is for individual, HUF, both, which is only for individual. So very simple idea can be a separate page in your copy. Just note down, create a table, 80C individual HUF, 80CCC only individual, 80CCD only individual. At a glance, picture would be created. You revise it, see it 2-3 times before your examination, and then the things would be quite clear in your mind. So 80CCD only individual. Okay. Now there are three different say provisions related with this 80CCD deduction. First is this 80CCD1. Now what is this CCD1? Okay. Basically, what you are doing, you are depositing money in National Pension Scheme, NPS. So any deposit by the assessee himself is depositing in NPS, 80CCD1 deduction is available. How much is the deduction? If assessee is employed, he is having income by way of salary, then maximum up to 10% of the salary deduction can be claimed. If assessee is not having any income by way of salary, then 20% of GTI, 10% of salary and 20% of GTI. Non-employees, self-employed kind of person, not having any income under the head salary, then up to 20% of GTI deduction is available. If assessee is in employment, then up to 10% of salary maximum deduction, actual amount contributed, or 10% of salary or 20% of GTI, whichever is lower, that is the deduction. Okay. Now this 80CCD1 deduction will get clubbed with that 1,50,000. 80CCD1 will get clubbed with that 1,50,000. 80C, 80CCC, and 80CCD1, all three inclusive, maximum 1,50,000 deduction would be available. So 80CCD1, there is an internal ceiling that is up to 10% of salary or 20% of GTI, and then there is this overall limit of this 1,50,000. Okay, 80CCD1. With respect to that 80C housing loan, we have a query. Raman Sachdeva from Delhi. Sir, only one house property principal amount is allowed for section 80C. Okay. Whether that 80C housing loan, etc., is available only for one house property or available for more than one house property. Raman, there is no such restriction in the section regarding one house property. That means this 80C deduction is available for any number of house properties. Okay, for even more than one house property also, that 80C deduction can be claimed. There is no restriction in the act as such. Okay, so again, coming back to this 80CCD, this is the first part. First 80CCD1, assessee's own contribution, internal limit of this particular deduction within that overall limit of 1,50,000. Then 80CCD2, second aspect. This is contribution by the assessee's employer. In subsection 1, assessee's own contribution was there, and now assessee's employer is also contributing. Okay, so now contribution by the employer, how much deduction is available? If the contribution is by the central government, maximum up to 14% of salary. If contribution is by any other employer, then maximum up to 10% of salary. Okay, so this is 80CCD2, employer contribution. Two very important things related with this employer contribution. First is, it is beyond that 1,50,000 limit. That 1,50,000 limit was only with respect to employees contribution, 80CCD1. That is clubbed along with 80C and 80CCC to reach to that 1,50,000. Employer contribution deduction is available over and above that 1,50,000 limit. Okay. And another and more important point, which you must have studied during the course of your salary topic, that is this employer contribution to national pension scheme. First, it will get added to my salary. This will be treated as my income under that salary, and then the deduction would be available under this section 80CCD2. Whatever contribution is being given by the employer, that total contribution will get added to salary, and then deduction under 80CCD2 would be available up to this 14% or 10% only. So if my employer contributes 20% to my NPS account, then the total 20% will get added to my salary first, and then 10% would be deduction available under this section 80CCD2. Okay, so this is second aspect of this 80CCD2. Okay, then the third part of this 80CCD2, 80CCD1, 80CCD2, and then third of this 80. The third part of this 80CCD, that is 80CCD1B. These three subsections, we need to have a clarity, because the treatment of all these three subsections is different. 80CCD1, payment by employer, payment by assessee himself, contribution by assessee, 80CCD1. 80CCD2, contribution by employer, and now 80CCD1B. Okay, now here again, this is a contribution by the employee. Okay, assessee himself is depositing this much money, and for this 1B deposit, 50,000 or actual amount deposited, whichever is lower, the deduction is available to the assessee. Maximum up to 50,000, assessee can claim a deduction. So very important question, 80 CCD1 and 1B. What is the difference? In both the cases, it is contribution by the assessee. The difference is this, and this is important. 80 CCD1, whatever is the contribution that is covered within that overall limit of 1,50,000. 80 CCD1B, whatever is the contribution, an additional 50,000 deduction is available. So all in all, assessee can claim a deduction up to 2 lakhs, 1,50,000 by investment in 80C, 80CCC or 80CCD1, 150 plus additional 50,000 investment in 80CCD1B. All in all, 2 lakhs deduction can be claimed by the assessee. Okay, so say for example, there is an assessee who has already done his 1,50,000 investment under section 80C itself. Life insurance premium, PPF, tuition fees, provident fund contribution, all in all 1,50,000 limit he is exhausted. Then he has deposited further 50,000 in the national pension scheme. For this 50,000, now deduction can be claimed under 80CCD1B, 1,50,000 ATC plus 50,000 here. All in all, 2 lakhs deduction he can claim. So 80CCD1, I'm repeating it, 80CCD1 and 80CCD1B, both have contribution by the assessee. Any contribution in 80CCD1 that will get clubbed within that overall limit of 1,50,000. Any contribution under 80CCD1B, additional 50,000 deduction can be claimed by the assessee. Okay, so this is regarding this whole 80CCD. Fine. Okay. Let's take these 3 questions. Sir, in 80CCD, if an assessee is NRI having employment outside India, but he has other income in India, can he avail this deduction, whether 10% or 20%? This is the question from Preeti. Okay. Having employment outside India, but he has other income in India, he can avail this deduction. Okay. The question is whether 10% or 20%. Preeti, depends whether he is having income from salary or not. As you are saying, there is an income from salary. He is in employment, whether in India or outside India doesn't make any difference. The assessee is in employment, so that 10% of salary would be the maximum deduction he can avail with respect to employer's contribution, with respect to his own contribution. 10% of salary, he is in employment, whether in India or outside India doesn't make any difference. Okay, Ramaya Tiruvananthapuram, very interesting question. For 80CCD1, is it 10% for both central government employees and other in case of employee contribution? Yes. With respect to employee contribution, it is same. For employer contribution, there is a difference. Okay. Sumit Jain, 80CCD1B is available under both the regimes, old and new. That old and new regime we will be discussing separately if time permits. So we hold on to this question, Sumit. Okay. Fine. So this is what is our discussion related with the first set of deductions based on payment, section 80C, 80CCC, and then 80CCD. Okay. After this 80C, then we can start the series of D based deduction, 80D, 80DD, 80DDB. After D, there will be E and then there will be G. 4 series are there, C, D, E, and G. C, we have already completed. What I propose, we can take a break at this particular point of time before we go into all these health related payments, 80D and all those things. We can take a break at this particular point of time. This is 7:23 in my watch right now. We will have an exact break for 15 minutes. So exact at 7:38, we shall reassemble again. As per my watch, it will be exactly 15 minutes time. So let's take a break here. We will resume again after 15 minutes break, where we will continue our discussion regarding this 80D series of deductions and all other deductions. Okay. So quick 15 minutes break, please. Somebody please send a feedback. We are live. Okay. Fine. Okay. During this break, a very interesting query has been sent by Remya from Tiruvananthapuram again. The query is, for the benefit of everybody, I will read out that query. This is something important point. In case of life insurance premium, the payment could not be made in the last year, and the total payment for the last year and current year, the total payment has been made in the current year. Whether assessee can claim the deduction of total amount which has been paid in the current year. Okay. So some payment was due in last year that has been done in the current year, and then obviously the current year's payment has been done in the current year itself. So whether the total deduction would be available in the current year or not. Okay. Again, first let's go to the say basic clarities. All these deductions are payment based deductions. This is what we have already mentioned. Payment based deduction, that means it is available when you make a payment. So whatever is the quantum of payment you have made, that much deduction would be available. It is not required to be seen in which year the payment has become due. So in the current year, if the payment for earlier year has also been made, the total deduction can be claimed in the current year. And at the same time, the reverse might also be an issue. In the last year, whether I can claim a deduction on due basis, the insurance premium which I have not paid but it was due, whether I can claim a deduction on due basis in the last year, the answer is no. It has nothing to do with your method of accounting also. Even if you are following a mercantile system of accounting, this is not a deduction under business head. The business deduction you can claim based on your system of accounting even on due basis. But this is chapter 6A deduction. It's a payment based deduction. Okay. So whenever the payment has been made, then only deduction can be claimed. So Ramya, if you have paid some amount in the current year, even if it pertains to the previous year, still you can claim the deduction in the current year itself. I hope it answers your query properly. Fine. So in this post break session, now let's start our discussion with deductions which are related with the health aspect, health related payments. This is a series of D, 80D, 80 double D and 80 double D, 80D, 80 double D, 80 double DB. All are health related payments. So some people said jokingly that D is for doctor, and that's why this all health related payments are on this series of section 80D double D and 80 double DB. Okay. First of all, section 80D, a very, very important section along with 80C. This is the second section 80D, which is again widely used. Number of assessees claim a deduction under this particular section. And then there are good amount of complications built into this particular section also. So both from a practical perspective as well as from an examination point of view, it's an important section, section 80D. Okay. Deduction with respect to health insurance premium and medical expenses also in certain cases. So what are the types of payments? Let's generate a general idea, broad idea first, then we will do again a minute analysis, a microscopic analysis later on, but a broader idea first. Three types of payments are covered here. First is health insurance premium. Any payment in the nature of health insurance premium, what we typically called mediclaim premium. So first is this health insurance premium paid by any mode other than cash. Other than cash, any other mode, check or bank draft or RTGS or credit card or UPI payment or Paytm wallet payment or any mode other than cash, health insurance premium. Second expenditure, that is expenditure on preventive health checkup paid by any mode. Here there is no restriction that it has to be a non-cash payment, any mode, preventive health checkup. Third is, in a case of senior citizen, any medical expenditure, subject to certain conditions that we will discuss later on. In the case of senior citizens, any medical expenditure need not be an insurance premium, need not be a preventive health checkup payment, any medical expenditure in the case of senior citizens paid by any mode other than cash, again the deduction is available. So three types of payment. Okay, I'm repeating it. It's a bit complicated section. A lot many ifs, buts, jugglery is there. So a simple idea of say understanding all the complications is first to keep in mind these three types of payments. Each type of payment, certain further conditions are attached that we will see later on. But three types of payment: health insurance premium paid by any mode other than cash, preventive health checkup payment, payment maybe even in cash also, and in case of senior citizens, any medical expenditure is eligible for deduction provided the payment has again been made by any mode other than cash. Okay, now who are the assessees? Who is eligible? Individual can claim ATD, HUF can claim ATD, ATC also individual and HUF both. Now ATD also individual and HUF both can claim in the case of an individual. Now let's focus on the individual. What all are the modes through which individual can claim deduction under ATD? In case of individual, the first requirement is health insurance premium on the health of following persons. Okay, on whose health does this mediclaim insurance, health insurance premium can be paid by the individual? There are two categories. First category is assessee himself, spouse, dependent children. Okay, so for the taxpayer, that is assessee and his family. So family includes a spouse and dependent children. First category. Second category, parents of the assessee, parents of the taxpayer. Two different categories, two different blocks are there for which this payment can be made. So first is taxpayer and his family. Now I hope you all are able to see the point which I'm trying to convey with respect to children. Now here what they are using the word is dependent children. Okay, so so now in the case of a married daughter, whether mediclaim insurance, health insurance premium paid for married daughter shall be eligible for deduction, the answer would be no. Life insurance premium for the married daughter eligible for deduction. But health insurance premium for the married daughter, no deduction is available. Why? Because married daughter is no more a dependent child. Okay, she is still child, but dependency is not there. So what is required to be seen is the dependent children. Again, major or minor is not the criteria. So simply being a major son doesn't mean deduction is not available. Be very, very clear. The criteria is dependency. A major son might be dependent on father, a minor son may not be dependent on father. So we are not talking about major or minor. The law is talking about dependent and not dependent. So taxpayer, the assessee, spouse, and dependent children. Second category is parents. Again, with respect to parents, they may be dependent, they may not be dependent. What is not there, that is important. So along with the parents, the requirement of dependency is not there. So parents, even if they are not dependent on assessee, still the payment for their health would qualify for this deduction, health insurance premium. Okay. Now, how much is the deduction available? The quantum of deduction. First category, that is self and family, maximum up to 25,000. Second category, that is parents, another 25,000. Now these are two separate limits and both will operate independently. For first category, self and spouse and dependent children, 25,000. For second category, parents, 25,000. It is not total 50,000. No payment has been made in respect of parent. It doesn't mean that for self and spouse and dependent children up to 50,000 deduction can be claimed. For each category, there is a maximum ceiling 25,000 for self and family, 25,000 for the parents. In case of parents, if any one of them is a senior citizen, then limit goes up to 50,000. In a case of parents, if any one of them is senior citizen, then instead of 25,000, the deduction is available up to 50,000. Now, with respect to this 50,000 limit, two important points, and again, smaller, finer issues, reading between the lines. Okay, first is senior citizen. Any of the parent may be senior citizen, not necessarily father and mother both should be senior citizen. Father is senior citizen, mother is not senior citizen, still that 50,000 limit is applicable. So any one of them is senior citizen, still that 50,000 limit would be applicable. Another important point is who is a senior citizen. Sorry. Now the normal understanding is this: we link senior citizenship directly with the age. The moment question is asked who is a senior citizen, immediately reply comes a 60 years of age. This is again, these all are smaller issues which create a problem. Whenever the law defines senior citizen, there are two criteria. Age is only one criteria, along with the residential status in India is another criteria. So senior citizen is somebody who is 60 years or more of age and also who is a resident in India. So somebody who is non-resident, he might be 65, 70, 75, 80, 85 years of age, but he is not a senior citizen. And this is important, not only for section 80D, but probably more important with respect to slab of tax. A common confusion, a widespread confusion. Somebody who is 70 years of age, sir, 3 lakhs is the exemption limit. Somebody who is 85 years of age, sir, 5 lakhs is the exemption limit. Simply 85 years of age is not sufficient. Along with that 85 years of age, the person should also be resident in India. So a non-resident 85 years of age, the exemption limit would be 2.5 only. 5 lakhs limit would not be applicable. Okay, so based on this ATD, please get a clarity about other aspects also. The senior citizen, okay, senior citizen, that means 60 years of age and who is a resident in India. So now any of the parent is a senior citizen, then 50,000 deduction can be claimed. Okay, so what is the position now? ATD 25,000 with respect to self and family, 50,000 with respect to parents if any one of them is a senior citizen. So all in all, 25 plus 50, maximum 75,000 deduction can be claimed under this section. Okay, for example, these are the payments which have been made. 24,000 on his own health, wife and dependent children, and then 52,000 with respect to the parents. How much could be the deduction available to the individual? Can you send me some answer? Assuming parents are senior citizen, how much would be the deduction available? Some quick answers, please. <clears throat> 24,000 for self, wife and dependent children, 52,000 for parents, assuming one of the parent is a senior citizen. How much deduction can be claimed? Right? Yeah. Okay. I think each one of us is getting it correctly. How much could be the total deduction available? If none of the parent is senior citizen, then 24 plus 25, maximum 49,000. If at least one is a senior citizen, then 24 plus 50, 74,000. The point to be noted, this 2,000 additional cannot be adjusted with this 1,000. Okay. Vasanthi from Trichy, I hope now you got it clearly. Preeti, again 24 plus 50, total 74,000 deduction would be available. Okay, the point to be noted that this 2,000 extra cannot be adjusted with this 1,000 short here. Okay, you cannot say 24 and 52, all in all 76,000. Out of the 75,000 should be the deduction available. This is a separate limit, 25,000 or actual, whichever is lower. This is a separate limit, 50,000 or actual, whichever is lower. So maximum deduction 74,000 can be claimed. Okay, this is the first deduction regarding the section 80D health insurance premium. Okay, now coming to another aspect of this 80D, earlier we have discussed about health insurance premium. Now section is giving a very interesting provision. In a case the assessee himself or his parents are senior citizens. Now we have said in case of senior citizen, the maximum insurance premium deduction can be claimed up to 50,000. But practically speaking, in a real life scenario, there is a possibility that in case of senior citizen, probably insurance company may not issue an insurance policy at all. This is quite possible. Somebody who is already age of 75 or 80 years kind of thing, probably no health insurance company would like to take a risk. No health insurance company would be issuing an insurance policy. So now this is a senior citizen who does not have any insurance policy. No health insurance policy is there. Okay. In that case, whether 80D deduction would be available for the senior citizen or not, I am ready to pay the premium, but no company is issuing me the insurance policy. So keeping in mind this practical situation, now the law is saying that in case a senior citizen, no health insurance policy has been taken, then any medical expenditure on the health of such person, the deduction would be available. Then whatever is the medical expenditure has been done on the health of such person who is a senior citizen and for whom no health insurance policy has been taken, any medical expenditure on the health of such person, deduction would be available up to 50,000 rupees or the actual expenditure, whichever is lower. The condition is this: the payment should be by any mode other than cash. So very, very interesting proposition here, that normally it is health insurance premium. You have to pay it to the insurance company, then only 80D deduction is available. But now law is saying, if in the case of a senior citizen, no health insurance policy has been taken, then whatever is the medical expenditure, whatever is the doctor's fees, hospital fees, medicine expenditure, whatever is the medical expenditure done on the health of such person, 50,000 deduction can be claimed. The only condition is this: payment has to be done by any mode other than cash. So either health insurance premium, or in absence of health insurance premium for senior citizen, any medical expenditure, the deduction under 80D would be available. Okay. Ambika from Mumbai, again a very interesting question, and the same question is from Sumit Jaipur also. If assessee himself is a senior citizen, then what will be the situation? Yeah, if assessee himself is a senior citizen, then for his own premium, he can claim the deduction up to 50,000 rupees. Okay, there are two categories. One is for self and family, second is for parents. So now self himself is a senior citizen, assessee himself is a senior citizen, he can claim the deduction up to 50,000 rupees. There may be a say interesting possibility, assessee himself is a senior citizen and his parents are still there. So for himself, he can claim 50,000, and for parents also he can claim 50,000. So in this very rare situation, the 80D deduction may go up to 1 lakh also. Assessee himself is senior citizen, parents are there. So for himself, the deduction has been claimed, and for parents also deduction can be claimed. All in all, 1 lakh deduction is possible. Practically, this may happen. Okay, so himself is a senior citizen, then 50,000 limit of the deduction would be available. So first case of ATD, health insurance premium. Second case of ATD, any medical expenditure. Third case of ATD, that is this, or before this, there is this issue related with the payment in lump sum. There is another possibility that sometimes you pay medical premium in lump sum. For 3 years, totality, the insurance premium has been paid. Now, normally these deductions are payment-based deduction. We just answer this query that whatever payment has been made in the current year, that total payment can be claimed as a deduction. But with respect to health insurance premium, now a special exception kind of thing has been created by the Act. If the health insurance premium has been paid in lump sum for more than 1 year, then the proportionate amount of deduction shall be allowed every year. Where mediclaim premium has been paid in lump sum for more than 1 year, then the deduction will not be available on payment basis. Proportionately, it will be allowed in every year. Okay. Mansha from Delhi, dependency of parents on individual is not relevant under ATD. Absolutely right. With respect to parents, they may be dependent, they may not be dependent. In the Act, the word dependent is written with the children only. So even spouse may or may not be dependent. Parents also may or may not be dependent. Okay. This is what I say the final analysis of the section ATD. Reading between the lines, some interesting issues arising out of this whole discussion. This is what we have just discussed. Parents may or may not be dependent on the assessee. The deduction is available. Spouse is also not required to be dependent. What is there, what is not there? The word dependent is there only with the children. It is not there with the parents, not there with the spouse also. Okay. Children, what is to be seen is not the age. What is to be seen is the dependency. Whether they are dependent on assessee or not, that is what is criteria. So examiner may try to create all sorts of confusion, mentioning that assessee's son and son has completed 21 years of age and all other information related with the son has been given. But all said and done, the son is dependent on the assessee till date. ATD deduction is available. Simply he has completed the age of majority, doesn't make any difference. For ATD, what is required to be seen is the dependency status. A minor child may be dependent, a major child may not be dependent. All possibilities are there. Okay. Now, with respect to parent, sometimes they ask this particular question also, and this is interesting. Say with respect to parents, two sons are there, and each of them has incurred expenditure with respect to medical expenditure or health insurance premium of the parents. Parents are senior citizen, son has contributed something, even daughter has also contributed something. Both can claim the deduction under ATD with respect to whatever contribution they have given. This is always possible. So father is there. Say for example, let's create a real life situation. It's a very interesting kind of possibility. Father is there. There is no mediclaim insurance. There is no health insurance. That means with respect to any medical expenditure, 50,000 deduction can be claimed. So father is there. Surgery is required to be done. Total expenditure is 2 lakhs. Two sons, one daughter, and the father himself. Each of these four have paid 50,000 for their surgery. All four can claim 50,000 deduction because the father is not required to be dependent on any of the children. Okay, so each son can claim, daughter can also claim, and then father himself can also claim 50,000 deduction. Each can be claimed. So the idea is this: if the insurance premium or the medical expenditure has been incurred by more than one son, more than one daughter, each of them may claim deduction under section 80D. Okay. Okay. Okay, is add-on the Mediclaim cover premium for grandfather? Okay, now the query is with respect to grandfather. Again, say income tax needs to be read in a very, very defined manner. Whatever is written there and whatever is not written there, both needs to be considered properly. What they have written is only with respect to parents. They have not written anything with respect to grandfather, grandmother. So I am incurring any medical expenditure with respect to my grandfather, I won't get any deduction. Probably the logical idea would be, rather than me, my father should make that expenditure with respect to my grandfather. So father can claim the deduction. I cannot claim it. Not available with respect to grandparents. Similarly, not available with respect to grandchildren. Available only with respect of any child of the assessee. So father paying health insurance premium for son, the deduction is available. Grandfather paying insurance premium for grandson, deduction is not available. 80D. All these relations in income tax are something very, very interesting. 80C, what all relations are covered. 80D, what all relations are covered. You need to have an absolute clarity. All these are, say, very sound confusing areas in the examination. They twist the question a little bit and everybody becomes confused. Okay, so be very clear on all these aspects. Who all are the relatives, where the dependency is required, where not required. All these clarity should be there. Okay, so this is regarding this whole section 80D. Now, 80D, after this, we directly come to 82. Two sections we need to cover more. Okay. After 80D, the next section related with the health aspect, that is 80DD. Okay, deduction in respect of maintenance or medical treatment of a handicapped dependent. This is something conceptually, this is something very simple kind of section. What is the situation? There is an assessee. On this assessee, there is a relative who is dependent on my assessee, and this dependent relative is a person with a disability. So, assessee having any relative dependent person with a disability, for this dependent relative who is a disability person, any medical treatment expenditure done for this person or any contribution to any insurance company or UTI scheme for the benefit of this dependent relative, these contribution, these payments shall eligible for a deduction under section 80DD. Okay. So who all are the assessees who can claim this 80DD deduction? Available to an individual or an HUF. Now be very clear. Here the section is using the word assessee resident in India, which is not there in 80C. So 80DD only and only resident. Here non-residents are not eligible because section is specifically mentioned resident in India. Okay, so assessee resident in India, being an individual or HUF, individual and HUF can claim, both can claim this deduction provided they are resident in India. 80DD. Okay, how much is the deduction available? What is the type of payment? What is the payment which will generate this deduction? Now this individual or this HUF, this individual is having any relative who is dependent on the individual. HUF is having any member who is dependent on HUF, and this member or this relative who is dependent is also a person with disability. So for their benefit, any expenditure has been done for their medical treatment, nursing treatment, etc. Any expenditure has been done or any contribution has been given to any insurance company plan, etc. For the benefit of these dependent handicapped persons, deduction is available. How much is the deduction? 75,000 rupees is the deduction which is available. And in case this person is a person with severe disability, the deduction is up to 1,25,000. Deduction of rupees 1,25,000. Normal disability 75,000. Severe disability 1,25,000 deduction is available. Person with severe disability, there is a definition for this. Medical certified disability of 80% or more, that will be treated as person with severe disability, 1,25,000 deduction. Normal disability, 75,000 deduction. Okay. Now, what is very, very important with this section is not these numbers 75,000 and 1,25,000. We all can keep in mind very, very easily. You already must be knowing it. But what is very important is the 75,000 or 1,25,000 is not required to be compared with the actual expenditure. Whatever is my actual expenditure, all other sections, the maximum limit. But then the maximum limit or actual expenditure, whichever is lower, that is the deduction available. For this 80DD, this is something very, very important. Even if my actual expenditure is only 1,000, still deduction of 75,000 or 1,25,000 can be claimed. The only section, the most important part of this section, again a solid ground for the examiner to create a royal confusion in the question. They will deliberately give you the amount of expenditure. Assessee is having his brother who is dependent on the assessee, and this brother is a person with disability. For this brother medical treatment, assessee and done an expenditure of 5,000 rupees. Lot many of us will get confused. We will claim deduction of only 5,000. 80DD deduction has nothing to do with the actual expenditure, quantum of actual expenditure. How much is the actual expenditure? Not the criteria. 75,000 or 1,25,000 deduction would be available regardless of the amount of actual expenditure. 80DD. Okay. Meaning of dependent. The deduction is available only with respect to a dependent relative. In the case of an individual, who all are included here: spouse, children, parents, brothers and sisters. First section where even brothers and sisters are also getting covered. So I'm again giving an alert to you. This whole family business is going to be a real confusion. 80D who all are eligible, 80C who all are eligible. Now 80DD, they've expanded the scope. They are talking about spouse, children, parents, brothers and sisters, and each one of them would be covered only when they are dependent. 80DD being a dependent is the main criteria. Okay, so dependent spouse, dependent children, dependent parents, dependent brother, dependent sisters. Okay, they are relative. All these persons are relative. They should be dependent, and then they should be person of a disability. In the case of HUF, any member of HUF should be dependent, and then they are say person with disability. They themselves should not claim a deduction under section 80U. 80U is the deduction available to the handicapped person himself or herself. Now, if a person himself or herself is claiming a deduction under 80U, that means he or she is having good income of his own. They are not dependent on somebody else, whereas the dependency is the main criteria for 80DD. So 80DD deduction is available only when any of these persons who are my relatives, they are handicapped and they are dependent on me, not having their own sources of income, not dependent on themselves, not dependent on anybody else, dependent on my assessee only, then only this 80DD deduction would be available. Okay, so this is about 80DD. So two very, very important issues related with 80DD. One is actual expenditure. Quantum is not important. 75 or 1,25,000 deduction is always available. And second is deduction is available with respect to a dependent handicapped relative. Relative includes spouse, children, parents, and also include brothers and sisters, provided they are dependent on my assessee. 80DD. Okay. the third in this whole trilogy of health related deduction, 80D, 80DD, and now 80DDB. This is again something very simple, deduction in respect of medical treatment, etc. Again, assessee is individual or HUF resident in India. I hope by now you all must have got this clarity in your mind, how much important it is to understand where the requirement of residential status is there and where it is not there. 80DD and 80DDB, the assessee should be resident in India. Earlier sections, 80C to 80D, assessee may be resident, maybe even non-resident also. Okay. Payments eligible for deduction. Now, 80DD deduction is available with respect to expenditure on medical treatment of certain specified diseases. Okay. In the case of an individual, the payment may be for himself or any of his dependent relative. Again, dependent relative includes spouse, children, parents, brothers, sisters, etc. In the case of HUF, this may be for any member of the family. The expenditure must be with respect to certain specified diseases. There is a list of diseases given in the Act, certain neurological diseases, cancer, AIDS, thalassemia, all these high-level diseases are covered there. Expenditure on the medical treatment of any of these diseases for any of my dependent relative, or in the case of HUF, for any member of family, this expenditure has been done. Deduction under 80DD is available. Quantum of deduction in the case of non-senior citizen, maximum 40,000. In the case of senior citizen, maximum 1 lakh, or actual expenditure, whichever is lower, that is the deduction which is available. Senior citizen, again the common criteria, 60 years or more is the age, and the person should be resident in India. Then the senior citizenship is there. 1 lakh or actual payment, whichever is lower. Non-senior citizen, 40,000 or actual payment, whichever is lower. That is the deduction available. Okay, so 3 sections. Health related expenditure, health related deductions, 80D, 80DD, 80DDB. Earlier 3 sections, C series, 80C, 80CCC, and 80CCD. So all in all, these 6 sections we have already covered. Now move to E series. Okay, E class deduction, E series deductions. Now again in this E series, there are 3 or 4 sections which we will be covering. First is this, and all these are now simple, not much of the complications are there. 80E, deduction in respect of loan taken for higher education. Okay, what is eligible? What is the nature of payment we are talking? Amount paid by the assessee by way of interest on loan taken for the purpose of higher education. So any higher education loan has been taken, interest on that particular loan, that is eligible for deduction under this particular section, 80E. That's why probably 80E is E for education. So any higher education loan interest, that interest is eligible for deduction. Okay, the deduction is only with respect to interest, not the total amount of loan, not the principal amount of loan, only the interest is eligible for deduction. Okay, now this higher education may be assessee himself or herself. This higher education may be of spouse or children, and then this higher education may be of any other student for whom this assessee is a legal guardian. Okay, if assessee is a legal guardian of any other student, for this student higher education also the loan has been taken, 80 deduction would be available. Okay, so here we are talking about assessee himself or herself, spouse and children. No requirement about dependency, no requirement about major minor. Every section has got its own flavor. It might be a tough task, but we need to do it to generate that clarity where the requirement of dependency is there, where the requirement of dependency is not there. 80 double D, 80 double DB, we have talked about dependent relative. 80E, again, it is spouse or children, may or may not be dependent on the assessee. So higher education of assessee himself or higher education of spouse or children, loan has been taken. Interest on that loan entitled for deduction under section 80E. Okay. Only individual are entitled. How much is the amount of deduction? Now, this is probably the only section where there is no maximum ceiling. There is no amount as such. What they say, whatever is the interest has been paid, that total interest is allowed as deduction. Maximum amount of deduction is not there. The actual interest paid is allowed as a deduction. The only ceiling is this, the number of years. All other sections, you can claim the deduction every year. This section, you can claim the deduction for maximum 8 years. Starting from the year in which that interest payment has been started, all in all, 8 years deduction can be claimed with respect to this 80E deduction. Okay. What are the conditions which are required to be fulfilled? First of all, it has to be a higher education loan. You cannot take this loan from every Tom, Dick and Harry. This loan must have been taken from any financial institution, that is any bank or any other financial institution, or any charitable or educational institution only. You have taken a loan from your relatives, your uncle has given you a loan, you are paying interest, 80E deduction is not available. It has to be a loan from a bank, financial institution, or any charitable or educational institution only. Okay. The loan must be for the higher education. Okay. Now be very clear. All these are solid confusions. 80C also we have talked about education, the tuition fees. Now there the tuition fees was for any education. We have mentioned this very specifically for 80C. Even nursery education fees is also covered for 80C. But 80E, it has to be higher education only. It cannot be for any level of education. How they are defining this higher education? Any level of education after SSC, after senior secondary examination, any level of education. So even a plain simple BCom is also a higher education for section 80E. Loan taken for this higher education, interest is deductible under section 80E. Okay, fine. Before we move forward, let's take certain queries here. 2 or 3 queries are there. Okay, Aruna from Rohtak, that is with respect to, I think, 80D. Same can be done in married daughter case for insurance premium paid. That is the father and husband both can claim deduction for 2 policies. Yes, this is possible. Okay. Father can pay the insurance premium with respect to married daughter, and husband can pay the insurance premium for his wife. But the problem, Aruna, would be in case married daughter, probably she is not dependent on father, because 80D deduction is available only with respect to dependent children. So married daughter, it is difficult to argue that she is dependent on her father even after marriage. Husband can claim the deduction because spouse may or may not be dependent, but father can claim the deduction only when the children are dependent on the father. So I have a doubt on your issue. Okay. With respect to 80E, whether parents can claim the deduction in some year and some year the son can claim the deduction, yes. 80E, higher education interest loan, whomsoever is making the payment, who will pay the interest, he or she will claim the deduction. So first 3 years, father have paid the interest, father can claim. Next 5 years, son has paid the interest, son can claim. This is possible. Okay. Fine. After 80, then we have these 2 very interesting sections, 80EE and 80EE. These are either or. Either you can claim 80EE or you can claim 80EA. So in the books, you will find these two separate sections, but there are a number of common points. So it is better to study them together. Okay, to develop a better clarity, we will do a say combined study of these two sections, ATEE and ATEE. Housing loan interest. ATE was with respect to education loan interest. Now ATEE and EE is with respect to housing loan interest. So loan taken for the purpose of acquisition of a residential property. Interest paid on that particular loan. Okay. So for what purposes the loan has been taken? For acquisition of a residential property. Interest paid on that particular loan, that interest is eligible for deduction under both of these sections. Okay. Now the assessee is only individual here, not even HUF. Only individual can claim this particular deduction. Now, how much is the deduction available? ATEE maximum 50,000, ATEE maximum 1,50,000. Okay. So now what is the difference? When 50,000 and when 1,50,000. Okay. When ATEE and when ATEE. Okay. But before this, the very important point is we are talking about interest on housing loan. All of us know that, sir, this interest on housing loan up to 2 lakhs deduction is available under section 24 also, under the head house property. Housing loan interest is deductible. That interest is deductible up to 2 lakhs. Now here deduction in ATEE is over and above that 2 lakhs. For example, your total housing loan interest is 2,50,000. 2 lakhs I can claim in section 24. 50,000 I can claim in ATEE, provided I comply with the conditions of ATEE or ATEE. What these conditions we will be seeing later on. But then same interest, same amount I cannot claim at both the places. If 2 lakhs I am claiming the deduction in 24 and my total interest payment is already 2 lakhs, then no further deduction would be available in ATEE. My total housing loan interest is 3 lakhs. I can claim 2 lakhs in 24 and then 50,000 or 1,50,000 as the case may be in ATEE or ATEE. Okay. So this ATEE and ATEE is over and above that 2 lakhs. Now what are the conditions for this these two sections? ATEE, there are 3 conditions. First is the loan must have been sanctioned in the previous year 16-17. Very year specific kind of deduction. In that one particular year, if the loan has been sanctioned, the amount of loan was 35 lakhs and the property which I have acquired, the value of that property was up to 50 lakhs. These 3 conditions have been fulfilled. I can claim a deduction under section ATEE up to 50,000, 2 lakhs in 24 and then 50,000 additional in ATEE. ATEE, the loan sanctioned in financial year 1920 or 2021. 2 years time period is here for ATEE. 1419 till 31st March 21, the loan has been sanctioned. The stamp duty value of the property is 45 lakhs here. The amount of loan is not mentioned. The value of property is up to 45 lakhs. The deduction can be claimed either under ATEE or under ATEE. Both are mutually exclusive. Depends upon what is the year in which the loan has been sanctioned. If the sanction has been done in 16-17, ATEE. If the sanction is between 19 to 21, it is ATEE. ATEE additional 1,50,000, ATE additional 50,000, additional over and above that 2 lakhs, which is always available under section 24. Common conditions for both these sections. Assessee should have only one property. This should be the property for which this loan has been taken. This should be the first property of the assessee. Assessee should not own any residential house property already. And then again, loan you cannot take from anybody. It should be only from a bank or from a housing finance company. That section 24 deduction is available in respect of loan taken from anybody. This 80EE interest deduction is available only in respect of loan taken from a bank or from a housing finance company. Okay. 80EE. Again, I am repeating, over and above that 2 lakhs. So, for example, if the loan has been taken, say in the current year, somewhere in the month of September 2020, okay, the interest liability on that particular loan is this 3 lakhs. I can claim 2 lakhs as deduction under section 24. 1 lakh I can claim over and above that 2 lakhs. The remaining 1 lakh I can claim under section 80EE. Okay. The last in the series of E. E series is basically for interest deduction. So we have talked about interest on higher education loan. We have talked about interest on this housing loan. And now the third type of interest, that is interest on loan for purchasing electric vehicle. Very specific kind of deduction. Okay. The question from Sumit Jain, Jaipur, the loan from NBFC is not covered. 80 it should be a housing finance company. It should be either bank or it should be housing finance company. The loan has been taken, then the deduction is available. Okay. Now come to this 80EE, a very specific kind of transaction. The loan has been taken for purchasing electric vehicle. The environmental friendly deduction kind of thing, in order to encourage this electrical vehicle purchase, in order to reduce the consumption of petrol and diesel, government is promoting electric vehicles. So in that sense, this incentive has been given, section 80EEB. Okay. Interest on loan for purchasing electric vehicle. 4 conditions are required to be fulfilled. Actual amount is fully allowed. The first point, whatever is the actual interest, the total deduction is available only to individual. The loan must have been sanctioned up to 31st of March 23, and loan may be taken from a bank or NBFC. Here NBFC is specifically covered. This electric vehicle loan may be taken from any bank or from any NBFC. Whatever is the amount of interest, total interest is allowed as deduction only to an individual. Even HUF is also not covered. So again, a very strong recommendation from my side. This individual HUF issue is going to create whole lot of problems. It does create whole lot of problems. So do make a separate table in your notes somewhere, simply noting this, that out of all these payment based deduction, which sections are available for individual HUF both, and which sections are applicable only for an individual. That will help you a lot. Okay. So 80EE. Fine. Now, after completing this whole C series, D series, and E series, now let's come to G series of this payment based deduction, section 80G. Okay. I think this is probably the last section which we will be able to cover in our today's discussion, but it has got some very interesting development, and some very interesting issues are involved in this particular section, again at the final level. So let's see it with all carefulness. Section 80G, deduction in respect of donations. Along with this 80C and 80D, probably 80G is another section which is widely used. Practically speaking, number of assessees avail this particular deduction under section 80G. Okay, so this is a deduction with respect to donations. Okay, what are the payments for which this deduction is available? Very simply, donations. Now, donations are required to be given to eligible organizations only. You cannot give donation to everybody and claim a deduction here. It has to be registered, specific, eligible kind of organizations Two issues related with this eligibility of donation. First is it has to be donation in money only, monetary donations. Donation in kind is not eligible. So I have donated my old clothes to a NGO. I cannot claim deduction here. It has to be a monetary donation. Money or money form donation should be there. And then if the amount is more than 2000, then it should be by any mode other than cash. More than 2000 donation, if you want to claim an ATG deduction, then it has to be by any mode other than cash, maybe by way of check or bank transfer or RTGS or whatever. Any mode other than cash more than 2000. Okay, so these are two basic requirements related with the eligibility of deduction. Now, who are the assessees covered? All assessees. Now, all of you should be immediately able to point out that this is the first section which is applicable for all the assessees. Till now, we were talking only about individual or individual and HUF at the most. ATG is available for individual, HUF, company, LLP, partnership firm, cooperative society, AOPs, artificial juridical person, resident in India, non-resident in India, all assessees. All means everybody can claim this deduction under section 80G. Okay. Sorry. Now, amount of deduction. The real issue involved in this section 80G is to calculate the deduction, the quantum of deduction, how much deduction would be available. Now, for the purpose of this calculating amount of deduction, what we need to consider, all these organizations to whom I can give the donation, they have been categorized into different categories. For this 80G deduction purposes, donations given to certain organizations are eligible for 100%. Whatever amount I have donated, the 100% of the donation would be eligible for deduction. Certain other organizations, only 50% is the amount eligible for the purpose of deduction. So there are certain organizations, I donate 1 lakh, I can claim total 1 lakh. There are certain organizations, I donate 1 lakh, I can claim 50,000 as the deduction. Okay, then there is another issue. There are certain organizations to whom I can donate whatever amount I wish. Okay, there are certain organizations where I can donate the amount without any limit. But then there are certain organizations where the donation cannot exceed a maximum limit. There are certain organizations where there is a maximum limit up to which my donation will be eligible for deduction. There are two different concepts, donation and deduction. Certain organizations, I can donate whatever amount I wish. Certain organizations, my donation cannot exceed a maximum limit. Then, whatever is the donation, certain organizations, 100% of their donation will qualify for deduction. Certain organizations, only half, 50% of the donation shall be eligible for the purpose of deduction. So now, all in all, if we combine these two factors, we will have four different categories of the organization. Okay. Organizations eligible for 100% deduction without any limit. Whatever amount I wish, I can donate, and total 100% donated amount would be eligible for deduction. Certain organizations which are eligible for 50% deduction only, donation I can give without any limit, but whatever donation I have given, only half of it, 50%, would be entitled for deduction. Third category, now this is the third category where the deduction is available within the maximum limit, But then the 100% donation would be eligible for deduction. And then the fourth category is this organization where donation is eligible within that limit, and within that limit whatever donation has been given, only half, 50% of that donation shall be entitled for the deduction. So 100% deduction without limit on donation, 50% deduction without limit on donation, 100% deduction with limit on donation, 50% deduction with limit on donation. These are four different categories. For the sake of simplicity, in order to simplify this complicated mechanism, what we can do is to segregate all the donations into these four different categories, and based on these four categories, then we can calculate the amount of deduction which is available, which is the deduction amount under section 80G. First category of organization, there is a long list of every category actually. So first category, whatever is this is the simple one, the most simple aspect. Whatever donation I have given, that total donation and 100% of that total donation would be the amount of deduction. So for example, this National Defense Fund, or the recent entry in this particular list during COVID times, that is this PM Care Fund or this Prime Minister's Relief Fund. Okay, so let's take example of this National Defense Fund. For example, my assessee has given a donation of 10 lakhs to National Defense Fund. Whatever is his income, there is no maximum restriction. He can give whatever amount. So he has given 10 lakhs. And then 100% of that 10 lakhs would be the deduction available. So any donation given to PM Care Fund, National Defense Fund, Prime Minister's Relief Fund, Chairman's Relief Fund, Jila Saksharta Samiti, and all these different kind of organizations, 100% without a limit. Whatever is the donation you have given, the total donation, 100% of the total donation shall be the deduction available to the assessee. First, these are certain other organizations in the same category: National Cultural Fund, National Children Fund, National Illness Assistance Fund. Whatever donation you give, the total donation and 100% of the total donation shall be the deduction available. Okay, now second, 50% without limit. Whatever amount you wish, you can give donation, but only half of this would be the deduction available. Prime Minister's Drought Relief Fund, Rajiv Gandhi Foundation, Jawaharlal Nehru Memorial Fund. These are certain organizations covered in this category. I give donation of 10 lakhs to any of these organizations. Whatever is my income, total 10 lakhs would qualify for the deduction. Half of that qualifying amount, 5 lakhs, would be the deduction available to me. First category, PM Care Fund and Prime Minister's Relief Fund, 10 lakhs donation, total 10 lakhs deduction. Second category, 10 lakhs donation, only 5 lakhs would be the deduction available. Third category. Now, third category is 100% within limit. To these organizations, I cannot donate more than a specified amount. There is the limit available. I cannot donate more than this. If I donate more than that limit, that will not be treated as a donation at all. That doesn't qualify for the deduction. Two categories of organization are there in this category. One is government or any approved association for the purpose of promoting family planning, and then Indian Olympic Association. This is important. Indian Olympic Association, or any body for the regularization development of any sports in India. Okay, so sports control bodies. Indian Olympic Association or any other body, Indian Hockey Federation and Indian, say, all kind of, say, different sports regulatory bodies, including Indian Olympic Association. Whatever donation I am giving, that cannot be more than a particular limit. Within that particular limit, the amount of donation, 100% would be the deduction available. What is that particular limit? That we will be discussing later on. But before this, the fourth category, 50% within limit. This is the most common part of this ATG deduction. Various charitable organizations, what we call NGOs, they have got themselves registered with the income tax under section 80G. So donation given to all these organizations, all these charitable organizations, all these NGOs, within that particular limit, 50% would be the deduction available. Okay. So what is that particular limit? Category number 3 and 4, the maximum limit. What is the maximum limit up to which deduction would be available? The maximum limit is 10% of gross total income. 10% of my gross total income, that is the maximum limit available. That is the maximum donation which I can give to category 3 and category 4. 10% of GTI. Now, what exactly is GTI means here? GTI, that means, now it's a strange situation. They are using the word gross total income, but then they are defining gross total income. That means GTI as reduced by all deduction under chapter 6. Technically speaking, GTI is before chapter 6 deduction. This is what we have discussed in the start itself. But here for ATG, they are defining GTI as GTI after all chapter 6 deduction except deduction under section ATG. GTI does not include here long-term capital gains. GTI does not include here short-term capital gain covered under section 111A, that is STT paid short-term capital gain. And GTI also does not include here all the income which are taxable at special rates, section 115A, 115AB, all these special rates income. Excluding all these incomes, after all deduction under chapter 6 except ATG, whatever is my income, that will be treated as gross total income. Maximum 10% of that gross total income is the donation which I can give to my category 3 and category 4 kind of organizations. Category 1, 100% without limit. Category 2, 50% without limit. Category 3 and category 4, this would be maximum 10%, and within that 10%, either 100% or 50% donation can be claimed. Okay, I think we can simply generate an Excel file here just to develop some more clarity on this particular aspect. So for example, first donation given to PM Care Fund, the amount of donation is 10 lakhs. I can claim 100% of this 10 lakhs as deduction. No requirement to see how much is my income, what is the maximum limit, nothing is required to be seen. Whatever is the donation, 100% is deductible. Okay. Now, second is this second donation is to, for example, Rajiv Gandhi Foundation, RGF. I have donated 4 lakhs of rupees. This organization is again without any limit. I can donate maximum 50% would be the deduction available. So 2 lakhs out of this 4 would be the deduction available. Now third is to an NGO which is registered for section 80G. To this NGO, I have given a donation of 5 lakhs of rupees. Now this is what is crucial. Out of this 5 lakhs, how much deduction I can claim? With respect to this 5 lakhs, how much deduction I can claim? Here I need to see what is my maximum limit, which depends upon my GTI. For earlier two, I was not required to see my maximum limit. For earlier two, no maximum limit criteria was applicable. So we have straight away calculated the deduction. In third case, I need to see whether this donation is within the limit or it is more than the limit. Okay. Now, what is my maximum limit? Say, for example, it has been given my GTI is say 30 lakhs. Okay, this GTI, apart from this GTI, I am having this life insurance premium payment 1,50,000, and then there is this mediclaim for my parents 50,000. So mediclaim for senior citizen 50,000, life insurance premium 1,50,000, total GTI 30 lakhs. So how much is my limit? I need to find out how much is my GTI for section 80G. GTI for 80G is actual GTI minus all chapter 6 deduction except 80G. So 30 lakhs minus 1,50,000 minus 5 lakhs, 28 lakhs is my GTI for section 80G. 10% of this 28 lakhs, 2,80,000 is the maximum donation which I can give. For claiming deduction under section 80G, I can give maximum donation of 2,80,000 to this registered NGO. I have given actually 5 lakhs. My eligible donation would be only 2,80,000. Now, against this 2,80,000, how much is the deduction available? Only 50%. So my amount of deduction with respect to this NGO donation would be 1,40,000. Against this 5 lakhs donation, my deduction would be 1,40,000. What is required to be seen is that 50% limit is applicable on the total donation. Donation and deduction, these are two separate concepts. 10% limit is not applicable with respect to deduction, it is applicable with respect to donation. So my total donation is 5 lakhs. As per that limit, it cannot be more than 2,80,000. Out of that 2,80,000, 50%, 1,40,000 would be the deduction available to me. Not many people get confused. They apply that limit with respect to the deduction. They say that 5 lakhs is the donation, 50%, 2,50,000, or that limit of 2,80,000. So I can claim a deduction of 2,50,000. The limit is not with respect to deduction. This is with respect to donation. I hope I'm making things clear. There are two different concepts. How much is the donation and how much is the deduction? The 10% limit is with respect to donation. It is not with respect to the deduction. So in this case, my GTI for 80G purposes is 28 lakhs. 10% of this 28 lakhs would be to the 2,80,000. Against this 2,80,000, 50%, 1,40,000 deduction I can claim. This 28 lakhs GTI for the purpose of section 80G. We can again go back to that presentation. GTI for the purpose of section 80G would be GTI minus all chapter 6 deductions minus long-term capital gain. Okay, there is a query again. LTCG 112A is also excluded. All the long-term capital gains are to be excluded. We know long-term capital gains are taxed either under section 112 or they are taxed under section 112A. For this 80G purposes, all long-term capital gains are to be excluded. Short-term capital gain, only that short-term capital gain which is taxed at a special rate of 15%, that is under section 111A, that short-term capital gain is to be excluded, and then all other income which are taxed at that special rate under 115A, AB, they are to be excluded. Accordingly, we will be calculating GTI for 80G purposes. 10% of that GTI would be the maximum limit. For my category 3 and category 4 donation, that maximum limit would be applicable for calculating deduction under section 80G. Okay. So this is what is the deduction with respect to section 80G. Payment based deductions we are discussing. We have covered section 80C, 80CCC, 80CCD. Then we have talked about deductions with respect to health payments, 80D, 80DD, 80DDB. Third part of it, interest related deductions, 80E, 80EE, 80EEA, and 80EEB. And then the section 80G deduction with respect to donations. Okay. Actually, within the time which is available for us for today's discussion, this is what we can cover. There is one more class we have planned with respect to this deductions from gross total income, that is on Saturday. So remaining portion of this chapter 6 deductions, remaining income payment based deductions, income based deduction, and then this section 80U, etc., that we shall be covering in our next class. Some very important clarities we have tried to generate in our today's discussion with respect to all these payment based deduction. I need to have an absolute clarity who all are my eligible assessee, where individual is covered, where HUF is covered, where the residential status is important. That is first clarity I need to generate. Whatever payment I am making, these payments can be made for all what persons, who all are my relative, in which section the requirement of dependency is there, in which section no mention about dependency has been done. All these clarities are something very, very important with respect to whatever sections we have discussed in today's discussion. Okay. So we close down our discussion at this point of time. We have got some time available. If at all there are queries, then we can handle those queries, or we can call it a day. Saturday, we will be meeting again for remaining part of this discussion about deductions from gross total income. Okay. Any further queries from your side, please post it on the chat box. Okay. So only query I am getting is Shubhratri. Okay. So I think we can close this discussion. Thank you very much. Any further queries are there, we can obviously discuss and then say next sessions to be followed. Okay. Thanks a lot. Good night.